Financial markets are frequently classified in two broad classes: capital markets and money markets. This distinction is based on the time horizon of the instruments traded. The capital market focuses on the trading of long-term assets. These are assets that have a maturity higher than 1 year. In turn, the money market focuses on the trading, exchange of short-term instruments, which typically have maturities lower than 1 year. Let me now talk a little bit about capital markets, which are the most widely followed markets. They comprise the stock market and the bond market. Institutions tap the capital market to raise funds for mainly long-term purposes. Industrial corporations, for example, may issue equity in the stock market and long-term debt in the capital market at the same time to try to finance their long-term operations, expand their business lines, finance their investments. Federal and local governments also issue debt in the bond market, but only in the bond market. They don't issue stock. And they use this debt to help finance their expenses. Investors in the capital market, taken as a group, operate as net lenders, albeit they typically engage in both buying and selling securities. So they bring cash into the market. On the other side, institutions that issue equity and debt in the capital market are net borrowers. The flow of money in net terms goes from the net lenders, so the investors, to the net borrowers, firms and governments. Now, it's important to realize that the borrowers raise money only when they place the equity or debt for the first time. That is, when they issue the primary instrument. This market is known as the primary market. In turn, securities already issued are traded among investors in what is called the secondary market. Now, capital markets are risky, and they are not typically suited for short-term investment. And this is where the money market comes to play. So, what is a money market? It's a market for the placement and trade of short-term fixed income securities. Typically, when we talk about fixed income securities, we tend to think about a bond. In practice, bonds are fixed income securities. They belong to the same group. But there are some other classes of fixed income securities that are issued and traded in the money market. And we will be discussing this in the next videos.